How would you like a 44% increase in your income? I think we could all agree that everybody would probably like a 44% increase in their income. However, it depends on what you have to give up to get that 44% increase in your income. I'm going to show you exactly what I am doing in terms of the sources of income I have in the portfolio income bucket, the passive income bucket, and the earned income bucket, and how you can utilize these different buckets to reduce your tax liability and get that raise. Plus, we're going to cover you're actually probably paying more in taxes than you realize. So, with that being said, if this is your first time here, what's good? My name is Sam, and for those of you who are returning, it's good to freaking see you. This is episode number 2, where we're going to go through my road to get to $1 million. Have you ever wanted to get to $1 million bucks? Maybe a year, a day, right? Or maybe just have $1 million in the bank? Well, there's a lot of people out there who make a lot of money, and they tend to not start talking about things until they already have it. Like, wouldn't it be interesting to see what Jeff Bezos did while he was in his garage building Amazon? Or maybe see how Elon Musk operated at the early stages of Tesla and SpaceX to understand what he was learning and doing in those businesses. So I am documenting my journey, whether that takes me the next 12 months to get there or the next 12 years to get there. And I'm going to show you everything I learned along the way so that somebody has that framework and to show you how incredibly easy it is to get there. So in this video, we're going to go through and we're going to start with, we're going to start with earned income, then we're going to go through passive and portfolio income to understand what they each are, and then we're going to dive in and take a look at my specific sources for those. So let's get rocking and rolling. Earned income, or sometimes referred to as active income, is basically what you're going to be earning at a job. Here is, this is from just Investopedia, but it's similarly here if you want to go down and actually read what the IRS says. According to the Internal Revenue Service, earned income includes wages, salaries, bonuses, commissions, tips, net earnings from self-employment. So if somebody was self-employed, that would be the net amount that they would pay taxes on, right? That's earned income. And the taxes that somebody is going to pay on earned income, if they live in 45 of the states that tax you, is going to be federal, state, Medicare, and Social Security. So we're going to dive a little bit more into those in a couple minutes, but you're going to have those big 4 taxes. And effectively, they're going to add up to 44% of your income. But we're going to dive a little bit deeper into that in a moment here. But now let's take a look at passive income. So this is again from Investopedia, but you can go to IRS and do a little bit further digging. Passive income is earnings derived from rental property, limited partnerships, or other enterprises in which a person is not actively involved, as with active income. So this is taxed a little bit differently than active or earned income. And then it is generally going to be taxed very advantageously. A lot of times people think of passive income as a income. There's certain guidelines to make something passive, but think of it from a rental property or any type of rental. If you're doing leasing or equipment type of stuff, that is included in this. Limited partnerships, so I actually have a partnership. We're going to dive a little bit more into that in a moment. Or investments in ownership in some type of business or entity where there's not a active role, which according to the IRS, I believe means more than 500 hours worked in it or put towards it every single year. So that is passive income. So there's not as many taxes. You're basically just going to be taxed at the federal and state level on this type of income. Now, the last form of income, these are all the 3 forms that the IRS has here. And this is people who are effectively not paying any taxes or paying a very little in taxes. Recently, the something came out where Donald Trump was paying around $750 on his tax return, right? And there's ways to get around taxes if you know the system. Knowledge is power is a common cliche that is not an accurate representation of reality, because there's plenty of knowledgeable people out there who don't make more money but want to make more money. Knowledge is only power when it is utilized or put into effort and used. Otherwise, it's just dormant. It's not doing anything. It's like knowing useless fucking facts for no reason. It doesn't bring any value unless it's actually utilized. Same thing with money. Money doesn't bring any value unless it's getting used for something, right? If you got $1,000 sitting on your table, that doesn't do you anything. It's not keeping you fucking warm. It doesn't, like, give you food to eat. You can't eat fucking money. It's only good when you use it. Same thing with knowledge, right? It's great to have more if you use it. So let's get into portfolio income here. Again, from Investopedia here. The third link comes down here to publication 925 from the IRS website. Portfolio income is money received from investments, dividends, interest, capital gains. So one of the ways that you could think about portfolio income, you could think about like the stock market, right? Kind of very broadly. There's other categories, right? But very broadly, earned income is job. Passive income you can think of as rental property, and within that there's multiple pieces to it, right? With a portfolio income, that is going to be with a stock market. Again, with the stock market, and there's other pieces to this, but just to wrap your head around what is actually happening here. And this again is taxed at the federal and state level. So let's go over here back to earned income. And through the example here, we're going to start at the top, federal. So we've got our federal tax rate for 2020 right here. So if somebody's making over $80,000, they're going to be taxed at the marginal rate of 22%. So that's where we get over half of the 44%. The next, I live in South Carolina, and this is basically just a tax on people who don't make a lot of money. But $15,000 is anything above $15,000 is taxed at the 7% rate here in South Carolina. This is in 2019, the income bracket here. The next taxes that we have here, I don't know if I've pulled them up. Okay, yeah, I did. This is the IRS's website. So this is Social Security and Medicare taxes. And this one I think warrants a little bit of explaining. If you have gone through and purchased a house, one of the things that the real estate agent will tell you is that you don't have to worry about the commissions because you, as the buyer of the property, are not paying the commissions. The seller has to pay the commissions. Now, with just a modicum amount of thinking, one could see that, well, who pays the seller in the transaction, right? If somebody is going to go through and purchase a house and the agent is telling you, well, you don't pay the commission. The person who is selling the property pays the commission. Who the fuck pays the seller? I do. So I am paying you, right? And the same exact thing works for Social Security and Medicare, right? It's just a way to manipulate the way people think about things so they don't realize how much of a fucking ripoff taxes are, in my opinion, being a little bit abrasive there. But this is on the IRS's website here. This is topic 751, Social Security and Medicare withholding rates. And we have here, the current tax rate for Social Security is 6.2% for the employer and 6.2% for the employee. So, again, this requires a modicum, which is a small amount or nearsightedness, right? If somebody just takes a step back, the employer is paying that on your behalf. So if the employer is not giving that to the government, where would that go? To you, right? So if they're not going to pay that to the government, that's going to go to you, meaning you are fucking paying that. So the effective Social Security tax is 12.4%, right? So people are like, oh, it's only 6.4 or 6.2%. But effectively, it's not. It is 12%. And the same thing works for Medicare. The current, now we're over here, the current rate for Medicare is 1.45% for the employer and 1.45% for the employee, totaling 2.9%. So effectively, we've got about a 15.3% tax here that we're paying. Right? When you take 15.3 plus 22% federally plus 7% in the state of South Carolina, this requires a 44.3% tax. Now, if you are at $81,000 and you make another $1,000, right, you're effectively getting 55% of that if you have earned income. So if you make from 81,000 to 82,000, you're like, yes, I just got a raise. Fuck you, bitches, right? It's time to pop bottles and get crazy, right? We just got another $1,000. Well, before we start popping bottles and getting cray-cray, we have to understand that 400 plus is going to the government, right? So now strategies. So now let's get into a little bit more of what I am currently doing because if you look at your say income statement, all the money that you're making, right, and then all the bills that are going out, that includes in the micro, meaning like how much you're spending for every single month on food, on internet, on all of your bills, right, car payment, other things that people do, right, but also what's one big expense that a lot of people don't consider? Taxes. That is a big expense that comes out of everybody's paycheck. So when you consider this and you go through and say so let's start with the state tax because it's going to be the easiest one, and this is exactly what I'm doing. I'm currently in South Carolina. Anything above $15,000 gets taxed at 7% here in South Carolina. So how can you get rid of that? Well, pretty simply, I don't know if I mentioned at the beginning, but about 5 states do not have any state income tax. So just fucking move. That's what I'll be doing early next year. Around mid-March, I am moving to Florida. I can get rid of that 7% right there. Pretty simple. And you might be thinking like, I can't do it. My family's here. My girlfriend doesn't want to move. My boyfriend doesn't want to move. Cool. Then pay higher taxes. It's your choice. I don't care what you choose to do. It's your life. I'm just telling you what I'm doing. Possibilities out there. You can do whatever you want with your life. Now, for the earned income sources for myself, I've got affiliate income, coaching income, and product sales. And we're going to be doing later this week a video on how much I made on in the month of November. So if you want to catch that video, you can press the subscribe button and the bell notification. If you are on YouTube, if you are on Instagram, just press the follow button, and I'll be dropping that video later this week. So those sources of income are taxed at the highest rates, right? And people may hear passive income is taxed less, or portfolio income is taxed less. Well, let's dive a little bit into the passive income. Now remember, passive income is rental property, limited partnerships, and other enterprises in which one does not play an active role. So for myself, I wrote a book this year. There'll be a link in the description if you want to check it out and support the channel. And that book, maybe when you're writing it, you put in all the work up front, and then after, you're not putting any more active time in it, and you're just continuing to get royalties effectively from it, as you're not putting any more work into it, but people are still purchasing it after a year. That is going to shift to passive income, which doesn't pay the 12.4 in Social Security tax. It doesn't pay Medicare. I mean, there's some circumstances. So I'm not a tax advisor. This is not tax advice. This is not financial advice. This is my personal fucking situation. And you can do with it what you will, but you need to do your own fucking research and talk to your own tax person. But you can effectively avoid 15%. Right? So if you were to go through and create a course or a ebook or some type of digital thing that can be sold that you don't necessarily have to put a tremendous amount of effort and work into after it has been created, you can go through and create passive income. That passive income only has to pay federal and state taxes. And if you move to a state that doesn't have any taxes, state income taxes, then you could effectively get rid of even more of that. Now, this is where you can get rid of basically all of it, and this is going to be the avenue that probably a lot of people who are watching this are actually aware of, but is rental properties. This could be rental equipment or other things, but rental property you hear of. So now people are always like, oh, rental property is very tax friendly, meaning you don't pay a lot of taxes when you own rental property. So people always talk about, well, because of depreciation, you can pay less in federal taxes. Cool, amazing. Nobody ever talks about not paying any Social Security tax, 12.4%. Nobody ever talks about Medicare of 2.9%, right? Or just getting rid of your state taxes. You can get rid of all those, which again, federal, 22%, half of the equation, 44.3% in terms of taxes. So if you look at it on an aggregate level, you have half of them that you can avoid with by switching to rental income effectively. And you can probably, and you can go through depending on how you structure it and how creative and resourceful you are at putting together your portfolio and whatnot. You can effectively pay virtually nothing on rental income. There's ways to accelerate depreciation, cost segregation, investment. You can classify yourself as a different type of worker where you can still earn income, but it's way more tax friendly, and the income from your investments and whatnot can net to you, so that you can basically pay nothing in that category. Imagine making 100 grand and getting to keep 100 grand instead of going through and paying $40,000 plus to the government. For what? You're like, oh, you need to support the society that you live in. Right, cool. Well, I think I can do way more good if I spend my $40,000. If you were like, hey, there's a law, you need to spend $40,000 to give to the government, or you need to spend it on some type of charitable impact or philanthropic endeavor, I guarantee I can create more impact with my $40,000 than the government ever will, because 80% of it's going to be lost through bureaucratic bullshit, right? Now, the next, so I have a rental property. I have a rental property in Florida, and basically don't have to pay any income tax on that. Don't have to pay any Social Security tax on that. I don't have to pay any medical on that. So that's amazing. Absolutely astonishing. And then I also own a business as a partnership, right? This is passive income. So what happens with a business? Well, again, businesses, depending on how it's structured, you can go through and pay virtually very little depending on how much income you're showing, because some of these taxes that you're going to pay in passive income are going to be determined on how much you're showing on your earned income. So if your earned income is at a much higher level, then you're going to pay more in taxes in the passive side of things. But when you come to the passive side of things, when you have a business, when you own a business versus when you work for a business, when you own a business, you are in control of expenses. That means you can opportunistically time your expenses to reduce your tax liability. That just means You are timing when you choose to spend money to get the highest impact from a tax reduction standpoint legally. Right? Anybody who doesn't do these things is just leaving money on the table to do that. And with a business, one could hypothetically continue to not really pay any taxes through continued investment into the business to show losses for extended periods of time. You just have to continue to grow it and get bigger. So that's possible to do that and effectively get rid of, again, taxes in that capacity. But we're blending some things here too, because this has to be a business that you're not actively engaged in. So the partnership that I have, I am not actively engaged in. So that allows me to do certain things, even though I own the business. I don't necessarily have to be actively engaged in it to be able to have control over how things are, money is utilized, right? So you may have heard that rich people don't necessarily own things, they control things, right? And this would be a perfect example of that. I don't need to necessarily, it doesn't matter about the ownership or getting the money from certain things. I can control how things are done with it, which is just as, valuable to a certain extent. Now, the next category and the final category here is portfolio income. This one is one where a lot of it's from the market. So another source for me, right? Because we've got now 1, 2, 3, 4, 5, 6. This is the seventh source of income. And so we've got affiliate income, and that's multiple different affiliates. But lumped together, that's one, right? But there could be 8 or 12 different affiliates. Then coaching, that's one category. And then product sales for products that I'm coming out with, that is another category, right? So those three together are 3 different sources of income that are all earned. The next, in terms of passive, is the book that I wrote, the rental property, and the business income. Well, I'm actually going to be disposing of that. So if you guys want to see a more detailed video on how to sell a business or how to structure selling a business, let me know down below in the comments. The last one in terms of portfolio income is through options. So with options, you're not necessarily going to eliminate all the taxes on there. If you're selling options and they are short term, you're going to be capital gain. They're going to be short-term capital gains, which is going to be taxed at the ordinary income rate, basically the federal rate. These numbers, right? 22%. However, moving to Florida, I can get rid of 7%. And then, because it is portfolio income, not earned income, no Social Security, no Medicare. So effectively, through the move, and because this is option income, which is going to be classified as portfolio income, I don't have to pay half of what I would otherwise pay in taxes if it was earned income. Now, you're like, Sam, you covered so much fucking shit in this video. How can I utilize this to make more money for myself? Well, you need to get better and start utilizing that knowledge you already have and gaining more knowledge. One of the things that I like to think about is, how can I learn faster? Generally speaking, I like to think about learning in 2 forms. We've got reading or listening or consuming and hearing that type of content, right? But then there's also the action of doing. And I think sometimes people get caught up in the reading or the podcast or books or etc., and they don't put enough time into the action over here. If you think about making more money, it is similar to if you go to the gym and you start lifting with just the bar on bench press. Over time, you build your chest, and then you can put 10s on, and then you can put 20s on, and then you can put 45s on, right? And now you've got 2 plates, and you're a fucking beast, right? And that time that you go from 1 plate or from just the bar to 1 plate to 2 plates, might take 2 years, might take 3 years. But that time and that you put in through learning and pushing yourself and building your muscle is exactly the same as what it's like earning income. You continue to try to build that muscle because making more money is a business in general is a muscle that you have to continually flex to get better at it. Right? So you got to educate yourself with the other knowledge, but then you also have to go through and execute on that to get better, strengthen that muscle so that you can make more. If you guys want to follow along exactly what I'm going to be doing as I'm on my road to getting to $1 million, make sure you press that subscribe button and that bell notification. Love to hear what your thoughts are on this video down below in the comment section. Peace.